Have you ever thought about when Tesla would split its shares again? Contrary to estimates of prices and valuations, it can be difficult to make expert estimations about this, but it is still possible. You won't want to miss this information, I guarantee it. When Tesla split its stock for the first time in August 2020, shares rose 81% between the split announcement and the split day in the month that followed the split. After a 14% decline, Tesla's stock recovered and rose approximately 36% in less than 2 months. The S&P 500 experienced no change during that same period, 6 months after the split. Tesla's 3-for-1 stock split took place in August 2022, 2 years later. Tesla carried out the split by distributing 2 shares of stock for each share owned following the closing of trading. The stock split lowers the price of the shares and increases their availability to a larger group of retail investors. It also lowers the cost of trading stock options. When Tesla first suggested the stock split, it stated that the decision was made primarily to benefit the company in providing every employee with the option of earning shares in Tesla, and that enhancing employee happiness would contribute in maximizing stockholder value. Why do businesses divide their stock? A company splitting its stock makes no modifications to its core operating principles. It is merely simple multiplication and division. The most recent split in Tesla, for instance, the corporation divided its stock price by 3 and multiplied each shareholder's holdings by 3. After the market opened on August 25th, the price per share of Tesla's shares dropped from over $900 to approximately $300. Worth of shareholders? Although stakes won't change, stock splits can be a good way to make buying a stock seem more affordable, which makes retail investors wonder when Tesla will have its next stock split. Some wonder whether there is some sort of pattern that Tesla adheres to when it comes to splitting its stock. Well, according to some, in order to predict the next stock split, referring to Tesla's stock split history has to be taken into account. When Tesla first split its stock in August 2020, the stock price was around $1,500 per share. In August 2022, the second time the EV company split its stock, the stock price was around $900 to $1,000 per share. It is important to note that Tesla is not doing stock splits only to make sure that the stocks go higher, but they do it because they know the stock price is going to go higher and to make sure their employees can buy stocks at a more affordable price. After the split in August, buying Tesla stock is significantly easier than it was prior to the split, when the company's stock price was in the $800 to $900 range. From that, a $300 per share price is a lot more affordable to more people. Although it is still a significant amount of money, it is much easier for retail investors to own a share of the leading EV company compared to when the stock price is around $900 now. If we follow the pattern of Tesla's stock splits, their stock price level is gradually declining. This seems to be excellent news because it informs investors that there will likely be more stock splits in the near future. According to Tesla's stock split history, the business is making every effort to split its shares before they reach the 4-digit range of $1,000. This will serve as the foundation for our prediction. According to certain estimates of the value of Tesla shares, it will increase to between $860 and $1,176 in 2024 and 2025. Having said that, it is possible that Tesla will divide its stock at some point between 2024 and 2025. In the later part of 2024 or the beginning of 2025, when the share price is just about to reach $1,000, Tesla may do its third stock split. How much will it cost if the price of a share of Tesla is $860 in 2024? The possibility exists that the business will split its equity 4-to-1. We got to this conclusion because Tesla appears to like to retain its share price in the low hundreds, which is in the $150 to $200 area, and not go below $100. Therefore, if Tesla splits its shares 4-to-1 in 2024, when the stock is valued $860, the stock price will be $215.80. If that occurs, the stock price in 2025 will be $283, in 2026 it will be $401, in 2027 it will be $450, in 2028 it will be $456, and in 2029 it will be over $500. That is, of course, assuming that Tesla splits its stock 4-to-1. If that occurs, Tesla would likely implement another stock split in 2030 when the share price exceeds $500. Similar to the previous recent split, which stated there were 2 possible ways Tesla will split its stock. This one may be a 3-for-1 split, while the other might be larger, like 4-for-1 or more. On the assumption that the company's stock is around $500 in 2030, the stock price will be approximately $170 if it is split 3-for-1. It does not appear that Tesla will perform more than 3-for-1 at the $500 range. but since this is a prediction, we should take it into consideration. Being said, in the conservative case, there will be at least 2 stock splits they could perform. Take note that this is a little more conservative due to the fact that there is Tesla insurance, bot energy, and robo-taxes to take into consideration. Calculations indicate that the average price of a vehicle sold in 2022 was $57,000, and that price is expected to increase to $55,000 in 2023 and 2024, and remain there until 2025. In the event that a stock split occurs between 2023 and 2024, when Tesla stock is worth $608 per share and $941 per share, it may be a 5-for-1 split, with a resulting price per share in 2024 being approximately $188. In 2025, Tesla stock will cost $268, in 2026, $402, in 2027, and in 2028, it will cost $544. Now, there might be another split to lower the price to $144 when the stock reaches $720 in 2028. However, these forecasts are the result of looking at the conservative scenario, in which we just consider the vehicles and a little amount of FSD, along with robo-taxi insurance and Tesla energy. Additionally, the profit and sales figures that were provided were extremely cautious. Despite all of that, this decade may still see at least 2 stock splits. Stock splits can increase trading liquidity and appear to lower the price of the stock. The market capitalization and value of the company remain constant while the number of outstanding shares rises and the price per share falls accordingly. A stock split also has an impact on stock price. The stock price will decline following a split because there are now more shares outstanding. Although a stock split increases the number of outstanding shares and proportionally lowers the share price, the company's market capitalization will remain same because of the share price reduction. The most typical split ratios are 2-for-1 and 3-for-1, which suggest that an investor will receive 2 or 3 shares, respectively, for each share they previously owned. The board of a corporation may decide on a stock split when the share price of the company rises to a minimal level that would unnerve some investors or exceeds the share price of comparable companies in the same industry. Even when the company's basic worth has not changed, a stock split might make the shares appear more reasonable. Additionally, it may improve the stock's liquidity. This is due to the possibility that small investors would view the stock as more accessible and purchase it, which will increase demand and raise prices. A stock split serves as a signal to the market that the value of the company's shares has been rising, which is another potential explanation for the price increase. People might believe that this expansion will continue in the future, which would increase demand and drive up costs. It is unknown if Tesla will experience additional stock splits within the next 10 years. The aforementioned estimates of when Tesla will likely divide its stock once more are merely informed guesses based on the information at hand. For more stock predictions like this one on Tesla, make sure to click the subscribe button.